dive in. First off, as you know, we'll start off with the macro. Jannis, take it away.
Thanks, Bill. So, we'll start off with the macro as always, of course. And looking back on last week, we got CPI data, also got PPI. But kicking it off with the 5% year-over-year print, which was a continued deceleration on CPI. And then if you look at some of the underlying components, which we are always watching because you want to see what moves behind the data. And there you can see that on the month-to-month print, which only came in at 0.1 in March, you had substantial deflation on the energy side. No surprise there because we had that flush below $70 on crude oil. That contributed negative 24 basis points. The positive contributors are the ones that we suspected to begin with, and really that ones that should contribute eventually to the deceleration of inflation here as we look to the out months. It was again shelter contributing about 17 basis points on the upside. And then if we look on the year-over-year contribution to that 5% headline inflation print, 2.7% of that is still shelter. So the renewed rents are rolling over drastically. So eventually you'll also see that spill over into the official CPI data. And then just the one component that the Fed's always been watching, and that's really been most concerning coming into this inflationary period that got the spot rolling. We're watching the CPI core less shelter, which is really an indication for wage price dynamics in the economy. And that contribution is also rolling over. So on the wage side, really encouraging, while we are already seeing those positive real wage gains, which should keep the consumer spending here, at least for the foreseeable future. And then just turning our eyes real quick here to PPI, came in at 2.7. So that's already right in line with the Fed's 2% average inflation goal. Again, if you look at some of the subcomponents, quite encouraging again on the PPI. So inflation data heading in the right direction. Bill, I'll let you cover some of the other data that we got and what that means for the Fed.
Yeah, thanks, Jannis. And I'll pick it up right where you left off there. PPI, I always say it's producer prices are a leading indicator of consumer prices, and that's important to know. As you see PPI roll over, import price index quietly last Friday was also contracted for the second month in a row. Prices from producers are coming in pretty sharply now. You're starting to see some of that into the CPI data, but quietly, not so quietly, last Friday was the Michigan consumer sentiment data, and that inflation expectations 1 year rose from 3.6% in March to 4.6% in here in April in this current month, and they're looking for 3.7. So this is a really big surprise, and it definitely the Fed's narrative has been, inflation expectations are a self-fulfilling prophecy. If you expect inflation to be higher, for instance, from the most simple fact, if you know gasoline's going to be higher next week, you're going to fill your car up today, that's going to drive prices higher. So the Fed is concerned about that. So that data set cannot go unnoticed. Well, final numbers next week on Michigan consumer data for the month of April. If that hangs up there, it's going to continue to leave a mark. But there are some, like you mentioned, rents and shelter rolling over. The services hasn't expanded in levels of the 3-month and 6-month trend. It's lower than that. So there's definitely some solid things to write home about here with inflation, and that's been our narrative. But I'm not ignoring that Michigan consumer number. That is something that could continue to poke its head out. Everybody's booking their summer vacation, and the prices, the real prices people are saying, are not coming down. Also, at this month, start of the month of April, so the big spike higher with that out of the OPEC production cut and crude oil moving higher. Gasoline prices going to trend higher seasonally as well this time of year heading into Memorial Weekend. So it's in the back of consumers' minds that the prices haven't come down and are likely only going to trend a little bit higher, making that impact. Now, because of that, you've also seen the Federal Reserve not back down from more work to do. Every single committee member coming out and saying that there's more work to do. Now that leads into the May 3rd rate hike expectations. And it's basically a foregone conclusion they're going to hike rates. One more 25 basis point hike there in May. Now we'll start getting more data from there. That's what I'm watching very closely as we head into that. And we have a blackout period. It starts Saturday. Do we hear any more comments there? Hawkish continue to maybe make a buy the rumor, sell the news for the dollar and rates. They press the dollar higher into that meeting. But also due to some of the data, if it doesn't roll over like we saw with CPI and PPI, last week. Then you have the non-farm payroll right after the Fed meeting and the May 3rd. Then you have CPI a week and a half later. So there's a lot more to digest before the June meeting. And I'm watching those June rate hike expectations. They got as high for another quarter point. So a quarter here in May and a quarter in June. Got as high as 30% probability yesterday. It's back down to 25% today after the Philly Fed was a big miss. But I'm watching those very closely. Those probabilities pick back up, and we could see that, potentially as the conversation gets going, get up to 50% or so. Market's going to digest that. The dollar's going to digest that. Inflation around the world this week as well. You saw from the UK was higher. You also saw from the Eurozone a bit higher. So continues to hear hawkish narrative as well around the globe, and that could drive up rates a bit too. So keep an eye on that. That's where my mind is right now. That's what I'm watching very closely. And Bill Baruch is the founder and CEO of Blue Line Capital. All opinions expressed by Bill and podcast guests are solely their own opinions and are not intended to provide specific advice or recommendations. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. Understand your financial condition before investing. Blue Line Capital, its staff, or its clients may maintain positions in the securities discussed in this podcast.